So, Mr. and Mrs. Prospect, now we're at the point that because we both agreed that the right amount of life insurance for you to have in order for you to do what it is that's important to you is $1 million. So what I'm here to do today is to walk you through a process and educate you on the options that you have to go ahead and put that life insurance in force. And what I brought with me here today are two different options that you can choose from. One is renting the insurance, which is called term insurance, or owning the insurance, which is called permanent insurance. First, let me start with the term insurance. As you can see, the amount of the insurance is $1 million. What that means is that any particular year, as long as the premiums are paid, if God forbid you should pass away, that $1 million would be going to your direct beneficiary. The second thing you need to understand about this policy, it is what's called a 30-year level term product. That means that it would be in force as long as you pay the premiums for 30 years. The premium is guaranteed to never increase, and at the end of the 30th year, the policy would terminate. Now, there's a few benefits to you to have this. Number one is the fact that it would cover what I would call a catastrophic loss for a very, very low amount of premium payments. The transfer of risk would be relatively insignificant. You send an insurance company $1,000 a year, and if God forbid you pass away, they send your direct beneficiary $1 million. That premium is guaranteed never to increase. The other benefits of this policy is that once you take a medical application and answer a number of questions, the underwriting is done at the time of application. Hopefully, barring any surprises if we went this route, and the insurance company gives you a favorable rating, over the course of that 30 years, that can never change. They can never cancel the policy on you, they can never increase the premiums on you, and they can never come back and ask you to requalify by taking an additional exam, which means you own it, which means you control it. The second advantage to this policy, Mr. or Mrs. Prospect, is the fact that because you own it, it is portable. Unlike any particular group insurance product that you might have at your employer, no matter where you go, this would follow you wherever that is. In addition to that, you own the rights to name the beneficiary, and you can change that whenever it is that you would see fit. And you are the owner of this policy. So it's fairly straightforward. You send in $1,000 a year. You have a guarantee that if God forbid something happens to you, your beneficiary gets $1 million. You have it over a 30-year period of time, and the underwriting is done at time of application. I would kind of equate that to renting, as I stated earlier, because as long as you, like when you're renting, you make your payments, you have a place to live. But as soon as you no longer make those payments, it is gone. And that would be the same as if you choose to stop your premium payments or once you are 30 years into this contract. So that's what we call term insurance. Now what I want to do is I want to shift to this particular product, which is called whole life insurance. It's also a $1 million policy, which means the same as the term insurance, by the way, that if God forbid why this particular policy was in force, something happened to you, your direct beneficiary would get $1 million. But unlike your term insurance of that premium payment being $1,000, as you can see in this particular product, the premium payment on this policy is $10,000 per year. And what I want to walk you through is I want to walk you through why my clients who understand this the way that I understand that buy boatloads of this product. There are many benefits to you to do so. Let's first start with what I would call accumulating and acquiring a long-term asset. What I mean by that is that study after study after study have shown that when people buy permanent life insurance policies, they pay the premium very, very, very often. Industry average is in well above the 90 percentile rate. Why is that beneficial? Why that's beneficial is because the other thing that studies have shown over time, as we look at acquiring assets, there are really only two things that the majority of the American population does. Number one is their home that they live in, and number two is some form, hopefully, of a qualified plan. A 401k, a 403b, an IRA, or some sort of product like that. But what studies have shown is that qualified plan, once we get to retirement, if we want to lead a life anywhere close to what it was like pre-retirement, is not enough. And so therefore, there is a necessity for an individual to be able to build a habit over a disciplined period of time of making a contribution to a long-term asset for decades in order to assist in the gap that would exist because the qualified plan in and of itself is not enough. And one of the benefits of permanent life insurance is that people pay their premiums, and it creates an asset in addition to their qualified plan and to their home, which brings options to their retirement later on in life. That is the first benefit. The second benefit, as you can see, this permanent life insurance policy death benefit, to the extent that you fund it long enough, is exactly what it says. It's permanent. It doesn't go away. Go back to the analogy I used with the term insurance and kind of equated it to renting. Now let's take a look at what it looks like when you go out and buy a house. And let's just assume that you bought a house with no money down, right? You make your first mortgage payment or your second mortgage payment. You own very, very, very little of the house. And the reality of it is the fact that the bank owns the majority of it at that time. But if you take, let's say, a 30-year mortgage and you never miss a payment and you never refinance, at the end of that 30th year, now you own the entire house. And it's the same way with permanent life insurance. But the difference that I find with almost all of my potential customers and or clients is the fact that when they go look at a home, they understand very quickly, even in the early years, in their late 20s and 30s, that as long as I'm alive, I'm going to have some place to live. So therefore, to be able to purchase a home and make mortgage payments while I'm working, so I have an asset that's fully paid off, so in my retirement I can live somewhere and not have the financial burden of having to pay for it, just makes sense. So therefore, most people have a desire to own when it comes time to their residency, right? But when I meet people, very, very, very small percentage of people really understand, well, okay, that would be good, Jim, but at the end of the day, I wouldn't need life insurance when I'm 60 or 65. So therefore, why would I want to own it? Most people start out and think to themselves, well, I've got, these young children, and I don't have a lot of money in the bank. I have very little assets accumulated, and I have a lot of debt. And so therefore, if something happens to me today, my family's in a world of hurt, so I need life insurance. But 30, 35 years from now, when my home is paid off, I've got more money than I can possibly spend. My kids are out of the house. They're totally off the payroll. Everybody's healthy. What would I need life insurance for? I'd just drop it. That doesn't make any sense. Well, what people don't understand is that first and foremost, unfortunately, in the country we live in America, what I just described is maybe 1 or 2, at best 3% of the American population, right? Most people get to retirement and are very freaked out. They're thinking, I don't have anywhere near enough money to be able to retire, and I'm gonna have to really make some serious changes in my lifestyle. So first and foremost, I would say that all that stuff I just said, hypothetically, is almost never true. But the other thing that's really important about why you would need permanent life insurance is what I would refer to as 2 universal thoughts that individuals in that what I call fourth quarter of life, for now let's just call that 65 and beyond, that dominate them, who have strong family values and have people in their life that they love and they care about. The first, Mr. and Mrs. Prospect, is fear. What do I mean by that? What I mean by that is that those people, the biggest fear they have at that stage in their life is they never, ever, ever, ever want to be a financial burden to their children. That's embarrassing, And in addition to that, they wouldn't want to put their children in a bind that's going to shortchange their own retirement planning. So therefore, what happens and how does that play out? And what does it mean when I say people would still want insurance at that point in time? You see, when somebody has assets in a qualified plan, and hopefully maybe somewhere else that they put some time and obviously money into over the years, and they're now retired, they look at that and they say, okay, we have a tremendous amount of uncertainty now, God willing, for the next 20 or 25 years we're living. We don't know what healthcare needs we're going to have. We don't know what the market's going to do. We just don't know what we don't know. And so if a big fear of theirs is that whatever they have accumulated has to last, they hoard it and they spend, but very frugally, and they spend, but with somewhat a level of guilt. They're not looking at it saying, you know what, we've built this for 40 years, sweetheart. Let's have at it and let's go out with a bang. Let's live life large. We've earned the right to do this. Let's go have a great life. No, they don't do that. They look at those assets as if they've got to conserve them. They got to last, and they got to be able to offset anything and everything that can happen, because they never, ever want to go to their children and have to ask for a loan, and they no longer have the ability to have earned income because that's now behind them. So they hoard it and they live a very, what I would call, limited and frugal life. You introduce me to somebody, and I've done a lot of research on this, who's retired, who has a chunk of permanent insurance that's paid for. They lead a life of tremendous financial serenity and peace. Why? Because they know they can not only live a very good life in their retirement and spend down all their assets, but absolutely positively, not when, or I should say not if, but when they pass away, that life insurance policy is going to the people that they love the most and that they know will never be burdened by their financial shortchanges, if you may. And so therefore, having life insurance gives you peace of mind in that fourth quarter to take whatever other assets you have and spend them down with never having to worry of running out and going to your children and asking for help. If we were to equate that to the old MasterCard commercial, I would almost say that's priceless. And the challenge is people at that stage of their life, they get it, they know it. I told you that if you go interview somebody that is that age, they know what it feels like to have life insurance, and they know the void they would have if they didn't. But the problem is people like you, Mr. and Mrs. Prospect, who are 30, it's hard to see that, right? It's hard to see that. But yet, unfortunately, in order to have that, you have to make a decision at the stage in life you're in now and fund it for 3 and 4 decades to have that freedom and have that sense of serenity and peace of mind. If you figure it out for the very first time at that age, it's too late, right? And so that is a big benefit of that. So let's talk about desire. The other desire that people have with strong family values, they have a strong desire to have their life have mattered and to be remembered. And there are all kinds of things that we can do during our lifetime by spending time with children and grandchildren to achieve that. But don't kid yourself that money is also one of them. Money comes in the form of the very last love letter that they always will ever receive. From grandma and grandpa, dear such and such, love grandma and grandpa. They have a strong desire to do that. The old saying that people, kind of sarcastically say their goal in life is to flip the gravedigger, their last dollar. That might be funny in your 20s or your 30s, but what I found in 32 years of this industry involvement and talking to people at an intimate level is that people, they don't feel that way whatsoever. And to be able to leave something behind and simultaneously never have to be a burden is a huge deal. Life insurance is the instrumental piece that provides that. And that is precisely why you need life insurance when you retire. And unfortunately, only around 5% of term insurance ever pays a claim. And the reason that is because most people outlive it. There's a reason why the premium is so little in term insurance, and I think that's good news for us. And that is that there's a low probability that from 30 to 60 you're going to pass away, which is why the premiums are only $1,000 in order to send $1 million to your beneficiary. So a significant benefit of this permanent policy is that you will have it throughout your entire life, and you will definitely benefit from it in that fourth quarter.